The biggest change we see is that we are moving from early cycle to mid-cycle. Now, different regions will be in different parts of these cycles, but largely the world is coming out of the pandemic and coming into recovery. And what that means is it's going to be even more important to look for specific opportunities within the broader investment environment. It's going to be important to look for not just the entire beta move, but also for alpha opportunities.
We don't see any big changes to the broad long-term growth themes of digitization, longevity, the rise of Asia, the energy transition, or even sustainability. But what we do see is that there'll be shifts in some of the underlying sub-themes that are going to provide more interesting investment ideas for our clients.
In many ways, the pandemic really changed investor priorities to begin with. What we saw was that, previously a lot of investors were looking very broadly at broad market indexes, or maybe, a little bit more narrowly, they were looking at sector funds as a way to approach a changing landscape and a changing economy. But within the pandemic, we saw that there was really a divergence even within certain sectors. If you look at the IT sector, for example, you saw some companies that were critical to the success of our economy during the pandemic, and other companies that were left behind. Printers and desktop computers became less important, whereas those companies that were facilitating cloud computing solutions suddenly enabled us to work from home, to let our kids be educated from home, to connect with our friends via social media. So we've seen this divergence within sectors that has really benefited those that took a thematic approach to investing, while in many ways leaving behind people that still were using sector-based investment strategies. So we think exiting the pandemic, we're going to continue to see thematic investing really grow in prominence, and investors start to take a more targeted approach to how they get exposures within their portfolio, not purely just relying on broad market indexes, and not even just relying on sector funds to play more specific trends within the markets, but to really get more granular to isolate the companies that are benefiting from long-term structural trends.